Okay. Hello, everyone, and a very warm welcome to the India Conference at Harvard 2022. Our session for today is on pathways to a 5 trillion economy. For those of you who are joining us for the first time, the India Conference at Harvard is co-hosted by undergraduate and graduate students of Harvard University. We have a strong legacy of bringing together eminent leaders, distinguished speakers, and renowned experts across government, business, and civil society. The aim is to enlighten and illuminate us regarding the most crucial affairs facing India today. In light of the pandemic, we decided to go virtual this year in engaging with our audience. I would like to briefly go over some housekeeping items. The panel discussion will go on for about 45 minutes, following which we will open the session up to audience Q&A. We value our audience engagement more than anything, and we hope you will use this time to further probe the arguments made by our speakers. Please use the Q&A function you see on your screen to post your questions. You will also have an opportunity to upvote questions. These questions will appear on top of the pile and will be presented to the panelists by the moderator. We also request you to tag us and use the hashtag ICH2022 to tweet and share your favorite quotes, insights, and moments from the panel. I will now quickly introduce our esteemed panelist and moderator. Firstly, please welcome Mr. Sanjiv Mehta. He is a member of Unilever's Global Executive Board, which runs the 52 billion euro consumer goods giant. He is President, Unilever South Asia, and Chairman and Managing Director of Hindustan Unilever Limited, which is India's largest FMCG company. Mr. Mehta is also the President of Federation of Indian Chambers of Commerce and Industry. Next, please welcome Mr. Gaurav Dalmia. Mr. Dalmia is the Chairman of Dalmia Group Holdings, a holding company for business and financial assets. It invests in private equity, real estate, public markets, structured debt, and fixed income. He's a member of the governing board of the Institute of New Economic Thinking at New York, and he's also selected as a global leader for tomorrow by the World Economic Forum. Lastly, I would like to introduce our moderator, Vikram Gandhi. Mr. Gandhi is a senior professor at Harvard Business School. He's also the founder of Asha Impact, an impact investing platform, and a senior advisor to the Canada Pension Plan Investment Board. He has spent 23 years in investment banking at Morgan Stanley and Credit Suisse. I'll now hand it over to Mr. Gandhi to start the discussion. Thank you all.
Thank you so much, Manan, and thank you very much for inviting me to moderate this panel. This is one of the premier events that Harvard students put on, and I'm absolutely delighted that I have an opportunity here to moderate a panel among two of the most esteemed business people in India and two good friends. And so welcome, Sanjiv and Gaurav, and really appreciate you taking the time to do this. We have obviously a very kind of a high-profile title called Pathway to a 5 Trillion Economy, which is a fantastic title to talk about and a well-chosen one. And I guess the issue from a large perspective, which I'd love our panelists to kick off this discussion with, is that currently, India's around 2.5, 3 trillion economy. To get to 5 trillion will require some pretty meaningful growth. If we do get to that level, most estimates suggest that we would be at that point in time the third largest economy in the world. India would be the third largest economy after the US and China. And that seems to be the trend and the universal view that that's where we're going. Having said that, we've also seen that while there are lots of opportunities in India, there obviously are lots of concerns as well. So hopefully in the next 40 minutes or so, we will have a pretty robust discussion where hopefully the three of us will agree on a lot of things, but perhaps disagree on quite a few things. And we look forward to having a good dialogue amongst us, but equally through a Q&A with the audience here. So with that, maybe I'd hand it over to you, Sanjiv. The beauty of this panel is that we have one of the most esteemed business operating people on the panel. Obviously, Sanjiv, in terms of running one of the largest consumer business in India and one of the largest business in the world, actually, has really got a pulse for what's going on in the ground in India. And Gaurav, as an extremely successful investor and operator in the real estate and financial services business, brings a perspective of an investor and a financial perspective to the discussion. So really, again, delighted to have you both here. And so let me start with you, Sanjiv. Pathway to a 5 trillion economy. What gets us there?
Hi, morning, Vikram, and thank you everyone for inviting me, and greetings from Mumbai. Vikram, when we talk about pathway to 5 trillion, we will get 5 trillion. There's no issue about it. The question is how soon? And if we just pause and reflect a bit on the history of India, 75 years back when we gained our independence, the Britishers had virtually not left us with anything. Our coffers were empty. And to give you a perspective, if we were to pick up the size of the economy 75 years back and look at it at today's prices, the size of Indian economy was less than the market capitalization of the company I lead. So that's how small the economy was. And the first 4.5 decades, we had that famous Hindu rate of growth, where we used to grow at about 3.5%. The population used to grow at 1.5%, 2%. And on a per capita basis, we were hardly moving the needle. The real change started to happen from the beginning of 90s. And if we look at for the last 3 decades, that's when we have galloped. And we have grown at a CAGR of about 6.5 to 6.6%. And that has had a transformational impact on the Indian economy. Just before the pandemic, there was a period of about 10 years when we lifted about 250 to 300 million out of the poverty trap. And it is not just about the size of the economy. We also have to look at it from a lens of per capita. And while we certainly feel very proud of the fact that we are the 5th or the 6th largest economy, and we are heading towards becoming the 3rd largest, I think it's very critical that we reach a stage where we can say that we have become a middle income country. And middle income country would mean that a per capita income has to move to somewhere in the vicinity of $5,000 to $6,000. Yeah, so that is something means we have to triple the economy. So we should be looking at not just 5 trillion, but the question is 10 trillion. And the critical aspect is, how do we cross the chasm between the 6.5 that we have delivered over the last 3 decades to the kind of growth we need to create livelihood opportunities for about 1 million people who join the workforce every month? Yeah, so that implies, how do we grow somewhere in the vicinity of 8 to 9% over the next decade and a half, replicate the kind of story when it comes to the growth rate what China did at the beginning of the millennium? And that would then transform India in a very meaningful way.
Thank you, Sanjiv. So thank you for that. So we've transformed from the Hindu rate of growth, as you rightfully point out, which was there for nearly 4 or 5 decades, and then from the early 90s, and particularly in the last few years, COVID aside, the growth rate has been in the 7-8%. And then you've got this whole issue of, the middle income. India currently is at $2,000 per capita. In most countries, if you look at history, that $2,000 per capita is kind of an inflection point where economies really take off, and there's like a hockey stick after that. Yeah. So Gaurav, from your perspective, since we are at 2,000, and as Sanjiv says, getting to 5,000 should be the aspiration to be a middle income country. How do we get from point A to point B? And what are your perspectives on in terms of growth rates and the achievability of them?
The way I look at it is, I think our fighting weight is somewhere between 7 and 7.5%. I'll defend that argument in a minute. But on the ground, it will feel like 11% because you add inflation. So on the ground, nominal growth will feel something like 11%. Now, what's the logic that I have for 7.5% that we should be able to achieve in the next 5-10 years? Rather easily, I think. So if you go into Harvard's Economics 101 type of environment, economic growth is investment rate divided by incremental capital output ratio. The investment rate is determined by the savings rate, which in turn is partly cultural, propensity to save, and partly dependent on the dependency ratio. So our dependency ratio in the 60s and 70s was very high. So savings rate was very low. Okay. Our savings rate has gone up as a dependency ratio has gone down. So our investment rate today is about 30%. Our incremental capital output ratio is slightly over 4 and inching upwards. So you divide that, and somewhere between 7.5 is a natural fighting weight. And it'll fluctuate, obviously. It'll come down to 6, it'll go up to 9 as it has done for brief periods of time, and nothing to get excited about or disappointed about as it fluctuates. Another benchmark I want to give is, as people ask, how did China grow at 10% or 9% for long periods of time? Let's not forget China's savings rate was 45, investment rate was 45% of the economy, and its incremental capital output ratio was 5. So that math worked out for China. I don't think we can simply copy that math because that's not our reality. I think in the short term, I always say 2 things will affect our growth. One is oil and one is monsoons. Okay. So oil is high, it'll put some roadblock on our growth. If monsoons continue to be good, it'll help us, but monsoons are not predictable, as you know. In the long term, I think we are on a good wicket. It's determined by demography and geography, both of which I believe are pretty good for India. So I think we should therefore easily be able to achieve this kind of growth. Demographics is on our side. So if you look at our working age population between 22 and 2050, it'll remain very high. And working age population growth will mean higher savings rate, less dependency ratio, better productivity, and better growth. So that's on our side. And we've seen this in Asian economies, economy after economy. Okay. I think there are at least 4 forces that will determine our growth. One I call the operating leverage of the Indian consumer. So if I make $100 and $80 goes in my roti kapra or makan, as they say, and $20 is disposable, and I have nominal wage growth of 9 or 10%, real wage growth of 5%, my disposable income may still be growing at 25%. So I think that will be one force, which is, I think, a secular trend. It'll fluctuate a little bit, but I think it'll be a big driver of growth. The second driver of growth, I think, will be MSMEs. If you look at just funding of MSMEs, so if you look at 2020, about $750 billion was the funding of MSMEs, and less than a third of that came from formal sources. More than 2/3 came from informal sources, which means higher cost. It's estimated that by 2025, this will be about $1 trillion. Okay. As this moves from informal sources of financing to formal sources of financing, I think there'll be a fillip for the MSME sector, which I think will contribute towards accelerated growth. The third force, I think, will be this China +1. So different countries have discovered different sweet spots. Thailand in auto parts and packed food, Indonesia in machinery and petrochemical, downstream petrochemical, and so on. India, of course, in services, automotive, increasingly electronics. So we'll also now find our sweet spot, I hope, as this China +1 strategy plays out. And the fourth driver, I think, will be disruption, the new economy. Now, Bill Gates famously says, in the short term, we overestimate things, but in the long term, we underestimate things. And I actually believe that. I think a lot of the entrepreneurial activity of India will also help propel growth.
So thank you for that, Gaurav. So I want to pass a few things that both of you said as kind of follow-up questions. So if you assume that the growth rate is 7 to 7.5%, and that's kind of the steady state growth rate, it seems to me, and then you also talked about the demographic dividend, at least whatever analysis I've seen, that a 7 to 7.5% rate is actually not adequate to absorb this demographic dividend in terms of job creation, et cetera. And then you actually need a lot higher rate. And if you're saying 11% is the nominal rate, well, when we're talking about growth rates, et cetera, we typically are talking about nominal growth rates as opposed to real growth rates. So maybe I'll just stick with you for a second, Gaurav. So we have the demographic dividend. I constantly hear this issue that, yeah, that's great, but we don't create enough jobs for these people. So therefore we have actually potential social unrest on our hand. And so how do we kind of calibrate this whole issue of we need higher growth rate to absorb this demographic dividend, but it hasn't really happened to the extent that it should. Let's talk about job creation as a first module, if you will, of this panel.
It's difficult to comment on how exactly this may play out, but we need to create 2 million jobs a month, roughly.
Mm-hmm.
So,
which in my understanding, by the way, to interrupt, is more than the next 10 countries combined in terms of job creation requirements.
So let me speculate as to what might lead to this kind of job creation. First is, if you see other countries, you take China, you take Korea from the 60s to the 80s, you take Indonesia, Mexico, Czech Republic, you take any country. They've had a political champion. So China had its famous "to get rich is glorious" moment. Okay. India kind of that. No Indian leader has explicitly stated that. The current dispensation is more right of center than the old dispensation, but it hasn't clearly stated that. So I think that's one factor which will draw investment and therefore job creation. So if you hear Kumar Mangalam Birla, he says we are going to have a mahotsav of capex in the next decade, okay? Because capacity utilization in industry after industry is reaching higher levels, and therefore we may have a big burst in capex, which will lead to job creation and so on. Then there are industries that we need to focus on that create jobs. Now, it may be counterintuitive, but tourism is one of the biggest employers in the world. And you may look at it and almost laugh and say, so our solution is tourism? In some ways, yes. So construction, tourism, and things like that, I think will help if we focus on that. Infrastructure, we're already focusing on in creating these jobs. So those would be kind of two comments that I would make.
So Sanjiv, over to you on this, on the whole aspect of job creation. Let's stick with that for a second. What is your, I mean, people have been talking about this for the last 3-4 years, and I keep COVID aside. I know that's kind of created a bit of a hiccup here, but it's just not happening. So what needs to change here?
Yeah. Let me give a bit of my perspective on what we need to do. First is, it's not about give us one, solution. It's never either or. It's always an and kind of thing that a country like India will need to have. If we just pause and first look at how our economy is shaped, we have about 40% of our workforce engaged in agriculture-related activities. Now, agriculture constitutes about 16-18% of our GDP. 16-18% of the GDP, employing 40% of the workforce. That's not a math or an equation which is sustainable. So there would be either we have to significantly raise the productivity in the agri sector, or we will have to move people to other industries where they can be gainfully engaged. Now, agriculture, if you look at where the issues are, that 85% of the people who are engaged in agriculture, they are working in small farms, which is about less than 2 hectares, where you cannot deploy the kind of technology you need to significantly enhance productivity. Having said that, India has now reached a stage where we do produce about 300 million tons of crops. So we are self-sufficient on a gross tonnage basis. Another 300 million tons would be horticulture. And with the kind of arable land that is there in India, we could definitely position ourselves as one of the granaries of the world. That would mean bringing in the kind of technology which we last saw being brought to the country during the Green Revolution. And whether you bring in precision agriculture, managing your water resources, managing the pesticide that you deploy, And we will also have to look, unfortunately, the reforms, which are very well-meaning, in my view, agri reforms, we couldn't really implement them. But I still believe that as a country, we will have to find ways and means of changing the dynamics in the agri sector. We are talking about anywhere between 15 to 20% of the produce gets wasted in the agri chain, from the farm gate onwards. And if you look at horticulture, it goes through 7 kind of intermediaries before it reaches the final consumer. And at each stage, you lose about 3-4%. So you're talking about 25-30% loss. And you need scale to bring in the best possible efficiency. So there are ways and means of going about it, whether farmer producers organization, whether it is cooperatives. But this is one area as a country we will have to solve, because if we don't enhance the income of our people living in rural India, we will not be able to achieve the kind of aspiration we set for ourselves. Second is manufacturing. Manufacturing is, if you look at a country, there are about 600 firms which have a turnover of more than $500 million. And as a country, we need perhaps maybe another 1,000 to 2,000 in the next 5-7 years, because large firms have a big role to play in the society. First is they're catalyst for change. Their productivity is much higher. And if we have to go up the value chain or R&D and innovation, which is a subject I'm going to talk about later, is we will need large firms to play a much bigger role in our manufacturing sectors. And scale is very important. So I'm very pleased with some of the reforms that have taken place in recent years. If you look at GST, just to give you an idea, we used to run with about 45 fulfillment centers pre-GST. And in the last few years, after the GST came in, we have been able to optimize them to a shade about 20%. The second is the time taken to move the goods from one area to the other. And we manufacture and sell about 50 billion units every year as Hindustan Unilever. That's come down dramatically. But we still have our issues. Our cost of capital in the country is still about, I would believe, 400 bips to 500 bips higher than a peer group. If I look at a logistical cost, that would again be in the vicinity of 14-15% of our GDP. And if you look at a peer group, that would be anywhere between 800 and 900. So again, you have about 500 bips of logistics cost to be brought down. Then when you move from a large sectors to MSMEs, we have, no one can doubt India's entrepreneurial spirit. So we have anywhere between millions of MSMEs. But many of these MSMEs, by the very nature, are fragile. Not many of them are job creators. And what they lack today, which we need to create for them, is access to finance, access to technology, and access to markets. So that's on the MSME front, but we can go a bit deeper into it. And manufacturing, every country has to find either a natural competitive advantage or we have to create a competitive advantage. Last year, India started on production-linked incentives or a PLI scheme for certain specific, about 13-14 sectors, which is again absolutely right, because this is enabling the industry to create the scale which we need to compete on cost, quality, service, and innovations. And if you look at the history of most countries, they would have created this kind of advantage for some of the large companies, which would then go and become world beaters. So we have to ensure that there are industries where we get significant competitive advantage. Services has been our backbone. They have done amazingly well. And while we may never be the factory of the world like China, we will have to find our own growth model. There have not been many countries which have grown at an accelerated pace over a long period of time without having a substantive growth in exports. Our merchandise exports for many years stagnated around $300 billion. I'm very pleased to see that this year, we are talking about moving up to $400 billion. And that together with our service exports of about $250 billion, we now have got a certain kind of momentum going. And just yesterday, the government of India and the government of UAE signed a comprehensive economic agreement, partnership agreement. And these are the kind of things we need to unlock on a bilateral basis with several countries. Yeah, be it with US, be it with EU, be it with UK, be it with Australia. That will allow us that in a world where we see a bit of retreat from globalization, that we have unfettered access to markets and we can ramp up. The other very important bit, Vikram, if we look at our history, the first and the second industrial revolution, we missed out. Third, we were a nascent country. This is the moment under the sun when we can harness Industry 4.0 and climb up the value chain in every which way, whether it is education, whether it is healthcare, whether it is governance, whether it is agri sector, whether it is the sunrise sectors, and significantly transform. It will have its impact, because when you go down the route, say, of digitizing the factories in a very big way, the productivity moves up. Productivity not just of capital, but also of labor. That would mean that a lot of jobs will be shed. But I believe if the economy keeps growing at the 9-10% kind of level, there'll be enough capital to create the kind of jobs we need to engage 1 million a month. Yeah.
Yeah. So, but Sanjiv, sorry. So Sanjiv, just one thing on that though. So I think both you and Gaurav have come up with a reasonably optimistic view as to where we're going, and then that's great. But to get to the 9 to 10%, reform is critical, and you very correctly pointed out that there've been a lot of good reforms here in the last few years. At the same time, there's been reform, for example, in the agricultural sector, where because of all the, like in the Punjab, the farmer issues, they had to back off, and basically what I would call kind of the friction costs of a democracy, if you will. What are from both of you, what would be some of the key reforms that you think need to happen? Maybe just 2 or 3 ideas that you think need to happen, which are practical and can actually be done as opposed to aspirational. Sure. So can you maybe highlight a couple of those and maybe Gaurav after that?
Yeah. Say the big one for us is, I think the government has now realized that the business of government is not being in business. So first is we should divest, leaving aside the strategic sectors, all the PSUs, where we have, loss making, many of them are inefficient, unable to compete. They are cash drainers for the government. So one is get out of that. And that would also give the government the much needed money they need to invest in areas like infrastructure. Now, I think it was Gaurav who was talking about that we need to get the private capex going. Capital expenditure, which used to be at about 39% of GDP, has now come down to 31-32% kind of level. Now, if we have to kickstart capital expenditure in a big way, there will be a period before the private capex kicks in, where the government will have to play a big part. And that is where it was very heartening this year. The government has enhanced the public capital expenditure by about 35% in current budget to 7.5 lakh crores, which is a big sum of money. And you need that to kickstart the virtuous cycle. Yeah, because private capex will not happen till the capacity utilization goes up from the current 65% to 75% and above. That's when the private capex comes in. So during this intervening period, government will have to be bold. Yeah, that would mean creating a fertile, not only government spending, being a bit aggressive in terms of spending and having not having sharply dropping your fiscal deficit rate, but putting it under productive expenditure. And the other bit is creating India to be a fertile destination for foreign investment, FI. And because India needs money, not from both from domestic sources as well as from foreign capital. And if you just look at our investment needs for the next few years, it would run in a few $1 trillion. Yeah, so creating an enabling environment, and there is a lot to be done yet. You know, the government has looked at several laws, and in many laws, many archaic laws have been put to the bin. There have been many amendments to make it much easier for the business to run, but there are still a lot of work yet to be done. As FICCI, in another couple of months, we will be releasing a report on ease of doing business, which should further facilitate doing business in the country. But there is one thing which I would believe from a reform perspective is extremely important, is enforcement of contracts, or basically ensuring that the dispute resolution in the country moves at a massive pace. You cannot have the kind of backlog we have in the country where it takes years for commercial cases to get resolved. So privatization, investments in public capital expenditure, and ease of doing business, and contract enforcement. That would be, in my opinion, some of the big areas which we will have to tackle as a country.
Yeah, that's interesting. That's very interesting. So Gaurav, in terms of reform, just to build on what Sanjiv just said, there's one thing about, there's doing PSU divestments, but then the government also increasing investment and therefore becoming part of the economy, bigger part of the economy to stimulate. So there's kind of an interesting discussion around that. But basically, India is capital starved. For capital formation in India is just, as Sanjiv rightly said, is just not adequate, and therefore foreign capital is required. In my experience, there obviously has been a lot of flow of foreign capital. I think all the issues with the West going on with China have kind of directed more capital towards India in a way, but still not sufficient. And having dealt with a lot of foreign investors, I advise a few of them, and we have big portfolios in India right now. Still, there's this thing of, look, ultimately, India has to, you're not going to invest in India just because it's India. You're going to invest because the risk-adjusted rate of returns in India are superior than elsewhere, and that it provides a diversification opportunity for a global portfolio, right? Two broad things. So what needs to happen to encourage more, from a reform perspective, to encourage more foreign capital to come to India, Gaurav?
So, Vikram, I agree with you. Capital will flow, whether it's Indian capital or foreign capital, because there are returns to be made, not because anybody wants or needs to invest in any one particular geography. Having said that, I think some of our past problems are behind us. So if you look at the banking crisis, okay, that's kind of behind us. We've pretty much cleaned it up. Okay. Unlike China, which is entering it into its banking type of crisis, could be entering. Okay. So I think in some ways, our animal spirits are coming back. Okay, we're enabling that, and that should attract capital flow. Second, I want to just make a point which is broader than capital flow into India, is that policies matter. Let's not forget that if you look at state-specific activities, Punjab was the richest state in India when India was formed. Recently, there was an article that Punjab is today the 19th richest state or union territory, if you count all of them. in India. So in 70 years, it slipped from number 1 to number 19. So I think there's a lot of state level activity, state level reforms, state level actions that will attract capital into that state. Thirdly, I want to say that India needs, and Sanjiv just spoke about the FTA we just signed with the UAE. India, I personally believe, needs to be part of more FTAs. We've had this existential issue that we won't get a fair treatment, but to me, it's a chicken and egg. We won't get fair treatment because we're not big enough, and we won't be big enough until we play. So I do believe we need to be more a part of FTAs, because a lot of capital that India attracts goes into export-oriented industries. So if you look at just IT services has attracted so much capital, pharma has attracted so much capital, and so on. So I think that's one more thing that we need to do. Certainly, we need to clean up and improve our institutions. So I wrote a piece for FT 5 years ago, where I spoke about weaknesses of Indian institutions. I made 3 or 4 different points. First was that Indian institutions play catch up to market reality. So the airline industry was started in India, not because there was a vision for the airline industry. It just started, when the government was kind of asleep. We want to make sure that those kinds of stories don't repeat. Secondly, India's story is of individual heroism, right? Punctuated by mediocre institutional activity. So we don't want to necessarily depend on heroes. We should have institutional frameworks. Third, India reacts best when there's a crisis in the backdrop. There's a crisis, Indian institutions will come together, we'll solve the problem. Okay. We need to change from that. And structurally, sometimes there are conflicting claims on Indian institutions. So we need to change that, and that will attract investment. The court system that Sanjiv pointed about, let me give you some statistics. I believe the Supreme Court alone has a shortage of 8 judges. From a Supreme Court perspective, that's a large number. There are about 70,000 pending cases. High courts, I believe, together have 400 shortages for judges, which are not appointed yet. And there are more than 5 million cases. At district courts, I don't know what the shortage of number of judges is, but I'm told there are about 40 odd million cases that are pending. So this regulatory judicial system overhang doesn't help. The last point I want to make is that sometimes it's difficult to do business in India, which small companies face, which FICCI members or large companies may not face. So there's a recent report by the Observer Research Foundation by a person called Gautam Chikkarmani, who's a friend of mine. And he quotes in that there are 26,000 plus clauses in Indian business laws which can lead to imprisonment. 26,000 plus. Can you imagine how a small business has to operate when they are facing these kinds of uncertainties and risk of imprisonment? I'll give you an example that he pointed out to me. I was on a chat with him a couple of days ago. He says, if you do not whitewash your toilets every quarter or something like that, the penalty for that is almost as much as a sedition law. So this is some overhang, some accident of history, which is haunting small businesses. So in Silicon Valley, if you're an entrepreneur, right, you go through existential dilemma. You call it the valley of death because you're wondering whether your product will meet the needs of the market. For an Indian entrepreneur, the valley of death is not product market fit. It is whether some regulatory overburden will kill it. So we need to solve that.
Vikram,
Yes, Sanjiv.
if I may just add how India is changing and why we people like us are so optimistic. Last year, I was attending a conference, investor conference with the chief minister of a state, where the chief minister said, what we are doing in our state and telling all the entrepreneurs, you first start production, then you seek permission. Now, this is the kind of thing we had never seen in India before. Yesterday, day before yesterday, I was meeting a chief minister of another state, and that chief minister said, bring in the investment to our state, and we will customize the policies to meet the requirements of your sector. And a couple of months back, I'd gone to one of our big states, and we were talking about setting up a big factory in that state. And we said we want to have 50% women. And today the law doesn't allow to do that women can work after 7 p.m. in that state. So the chief minister was very clear. We will amend the laws to ensure. Today in the new India, there is a deep-seated desire. And the thing which I feel extremely good about, historically, there was always a trust deficit when it came between business and the government and bureaucracy. Now that seems to be going away. And increasingly, the government is feeling that no, the businesses, they are partners to progress. There is no crime and wealth creation. And a lot of efforts are being made very proactively to make the business environment much more friendly. Of course, a lot is to be done. But the most important bit is the mindset and the attitude. And I think that's moving in the right direction. And as business people, let me give you an example of my company, and then we can come to it. Consumer goods. Consumer goods often is a barometer of the health of the economy and also a driver of economy. Now, Hindustan Unilever is the second largest Unilever business in the world by value, the largest in volume terms, and our market cap in HUL is now over 50% of Unilever's market cap. So the messages that I want to, and when you look at the runway to grow, our per capita consumption of FMCG in India is just about $45. Yeah, Indonesia is double that, China is triple that, Philippines is 4 times that. So the points that I'm making is, first, massive runway to grow. Second, as one of the large companies in the country where the source of capital is foreign, we are a very clear poster boy that you can come to India and make money. Yeah, and we're very clearly an indicator that India is a place to do business. There's massive opportunity, but come with a long-term perspective when you come into it. That's when you would be able to make a difference to the country.
Yeah. So you actually reinforcing what Gaurav also said earlier on, which is the operating leverage of the consumer, etc. Now there are a bunch of questions that have in the chat here from Akshit and Saurabh and even Chetan on the whole issue of entrepreneurship, particularly from Akshit and Chetan, on the issue of entrepreneurship, the ecosystem, the role of the gig economy in India. And a lot of folks on the call here would be kind of interested in being entrepreneurs in India, looking at the opportunities there. Clearly, the consumer opportunity is huge. Like you said, there's a massive runway. But what advice would you give to them, or what views do you have in terms of the entrepreneurial ecosystem in India?
Certainly. When we were growing up, Vikram, unless you belong to a business family, it was very difficult to start a business. Now you only need an idea, and you can start the business in India. Yeah, there are angel investors, and everyone would have seen the startup ecosystem in the country, how it is developing at a very rapid pace, and the number of unicorns that have been set up in India over. So come with great ideas. The advice that I always give when I mentor youngsters, startups, and entrepreneurs is don't get obsessive about valuation. When you focus on creating value, valuation does happen. Yeah, and when you look at from any business lens, it's so important to make sustainable business models. And to make sustainable business models, you need to have very clearly understand what problem you're solving. Second is build distinctive capabilities and have a long-term view. And that's when you would be able to get massive success in the country. And I saw some questions where people were talking about what are the sunrise sectors. There are several sectors in the country. You look at it from a perspective of digitech, from a perspective of health tech, from a perspective of fintech, from a perspective of green tech. Yeah. Another area where India could occupy the high ground is decarbonizing the economy. And we need a mindset where, go back to the 70s and 80s, when most people thought to enhance quality of a product, you also need to put in more money behind the product. Till the Japanese taught us through the automobile industry that you can enhance quality and reduce cost at the same time. Yeah. Now we need a mindset that you can enhance product superiority, reduce cost, and decarbonize at the same time. And if we bring that in, that would create the kind of competitive edge for the country, because no other country has gone down that path yet. People are working on it, but you can't say any country has an edge of it. And with our prowess of technical know-how, the kind of people we have, and all the guys on the call today, I would definitely urge you all, look at Indians on the call, look at coming back to India. It's absolutely a fertile place for any idea that you may have to nurture and seed and grow.
Yeah, so, I mean, the issue of decarbonization and this whole issue of energy transition is a massive opportunity, and by some estimates, it's globally a kind of a 50 trillion investment opportunity. Opportunity, and so India should clearly play a big role in that. Gaurav, from your perspective, what advice would you have for entrepreneurs in terms of both opportunity and just operating advice?
A couple of things I would say. First is, I would say, please don't be fooled by today's bubble environment. This is not reality. What's going on is pretty unique. You can take advantage of it, do it, but don't kid yourself that this is going to stay. Second, I would say is, what I've learned from entrepreneurs actually is how to think big. Many niches are bigger than I would have thought before playing. So if you look at Vinny Cosmetics, what they were able to do in the deodorant market, they proved that the market was bigger than what we thought. And initial investors, I think, exited with 18x return in that company. Second point I would make is, India is a unique combination of scale and growth, which is why the Sequoias of the world and the Tiger Globals of the world are playing India more aggressively than other markets. And even in the old days, when Warburg Pincus exited Bharti, it was one of the best returns for Warburg Pincus anywhere in the world. The kind of money Blackstone has made out of India last year or 2 years ago is amongst the best anywhere in the world. So it's a very attractive opportunity. Vijay Shekhar Sharma told me two things that kind of resonates in my head. The first thing he told me was, Gaurav, if something can move online, okay, it will eventually, because of ease, etc., etc. How these guys will eventually make money is a different matter. But anything that can move online will slowly but surely move online. So get ready. Figure out your product category and get ready. Secondly, in any one niche, if there is an incumbent, legacy guy, and a new guy, chances are the new guy will win. The legacy guy will not be able to stay with the competition because the new guy will simply be hungry. So I would urge entrepreneurs to have that confidence that even though they may have legacy type of disadvantages, they can make up for it. One thing that I've seen, and we invest a lot in niche consumer brands, we tend not to do so much of pure tech and digital only brands, but we tend to do consumer brands. In the old days, and Sanjiv may be able to comment on it, when we used to wonder what wins, product or distribution, we used to be a little bit biased towards distribution. But I've realized products win. Distribution is cheaper to create than we all used to think. So that would be my message. Energy, let's call it foolish energy, will win over confidence, and let's call it complacency. So I'd rather have foolish energy than complacency.
Understand. Good old cheers for foolish energy. I like that. So it's always good to have. Yeah.
Vikram,
Yes, Sanjiv.
there is one more fact which we should never forget, that India is a functioning democracy. Yeah. And we have seen in many parts of the world that, how private entrepreneurs, do not get the kind of freedom to do and play what you could get in a country like India. And in the long term, I think India is really well positioned. If we get our infrastructure right, if we get our laws, much more in tune with the modern business, yeah, if, kind of entrepreneur zeal and spirit that has awakened in the country, and India would be a great destination. It's an amazing market. And though nowadays we don't talk about as much as we used to talk earlier, the 1.4 billion people, but I will tell you, it's absolutely amazing. And you can create market in India at different end of the spectrum, from the premium to the masstige to the mid-tier to the bottom, and still create value.
Yeah. So the world, India is your oyster, if you will. There's a whole spectrum of stuff. Both of you and Gaurav, you also alluded to your comments of this froth in the market, if you will. And if you just look at more near term rather than long term, big picture, one question here from my old friend Anil Narang is, who is a big follower of Berkshire Hathaway and Charlie Munger. He'd actually asked me to suggested I buy Berkshire Hathaway stock about 25 years ago, and I did not. So it was a big mistake of my life. But nonetheless, he talks about Charlie Munger having essentially said that the froth in the markets right now, and I think it's in India as well, perhaps, is bigger than it was in the dot-com bubble of the late 90s, which obviously resulted in a massive bust. How do you view the markets right now in India from an investing perspective? And if there's a bust globally, what do you think would be the implications in India? Gaurav, do we want to start with you maybe?
Yeah. You see, just look at the dot-com bust of 2000. 20% corrections is not what we were playing with at that time. We were playing with 80, 90% corrections. I believe Amazon at that time corrected by 80% or more. So we need to be prepared mentally that our valuations are not off by a small number. Our valuations may be off by a very, very big number. I was at a family wedding a couple of days, yesterday and the day before. So the day before, my cousin was telling me, I can't remember the statistic he threw at me, but what he told me is FIIs are selling, Indian institutional investors are buying. And the net gap was something like in the range of $100 million or something. Yet the market fell by a big number. So Indian markets are so illiquid that small sale buying gaps can create falls. A couple of percentage points in the index fall can just happen with small numbers. So we have to be even more aware of this in India than in the US. Having said this, I think if you can ride this volatility and not focus on valuations, but focus on building a business, okay, I think you will be okay. So conserve cash. Don't go all out spending money as if the tap of money is open forever. You have to believe that the tap of money will shut down. And you will face correction. And at that time, that's the time the men and the boys will probably get separated. Okay, right now it's easy to be an entrepreneur. That's when you will get tested. And that's the time you should actually wait for to gain market share.
Yeah, Vikram, the famous old saying that growth is vanity, profit is sanity, and cash is reality, is many people forget that. During the dot-com days, people used to do the valuation based on pro forma profits. And people like us started wondering that maybe we learned the wrong way, how you value an enterprise based on the present value of future cash flows. And so I think what Gaurav has rightly been saying, that so long as we create the right business model, so long as we are working towards serving a need or solving a problem, And so long as your unit economics are sensible, yeah, then you will come big in India. But if you have a wonky business model and you're just riding the wave, those people will struggle in the days to come.
That's
I want to
great.
make one
That's
more point,
excellent
Vikram.
advice.
Vikram, if I may
Yes,
make
Sanjiv.
just one more point. One of the
Maybe
positive
just actually one thing, Sanjiv. Sorry, Gaurav. Maybe because we only have 5 minutes left, but in addition to your point, if you can also, like, what would be the one or two things you'd like to leave the audience with from your perspective, given, it's the Harvard Club's, Harvard Student Association's South Asia conference. What are the couple of messages that you'd like to leave? And then I'll give Sanjiv the last word on this. Go ahead, sorry, Gaurav.
So I just wanted to make a couple of points. One of the positive things that has happened because of this funding boom is, I believe, ESOPs worth about $5 billion are in the hands of employees. And let's assume that's wrong. So ESOPs worth $2.5 billion, $2 billion are in the hands of employees, which I think is a very, very positive thing that is going on. Okay. Second thing I want to make is, and just as in jest, investors tell us this is mark to market. Warren Buffett will tell you often mark to market means mark to model. And often mark to model means mark to myth. So, be aware of that. What I need to leave, if I had to leave a message, is, Arthur Miller was a playwright. He wrote Death of a Salesman, the play. He was married to Marilyn Monroe, which I suppose turned him into a philosopher. And he said, an era has ended when all its illusions have been exhausted. So for the West, the rising inequality, the fact that new generations have not kept pace with their parents, that era has ended for them. For us, a new era where you can aspire to something which your parents could not even dream of, that's the era that is on. So we don't necessarily need to benchmark with what's happening in the Western world in today's modern India.
Fantastic. Thank you for that, Gaurav. Sanjiv?
India, I believe, is on the cusp of greatness. If there was ever a moment in the last 75 years when we could say that this would be India's decade, I think this is the moment. And you look around you, in any field, from agriculture to manufacturing to services to tech and whatever be it, there is a massive opportunity. Country needs great entrepreneurs and great managers. And increasingly, the environment, an enabling environment is being created where business can blossom. And I would urge all promising youngsters who are studying at Harvard and they are wondering whether should we get back to India or still look at some other country for greener pastures, I would say come back to India. India is waiting for you guys.
Thank you. With that really positive note, first of all, let me thank both of you for taking the time to do this. It really means a lot for the Student Association and for us at the faculty at HPS for all the support that very important business people like you give to the institution. And it's so encouraging for you, for the message that you're leaving. As you all pointed out, whether you look at the consumer, the demographic dividend, the job creation opportunities, the various entrepreneurial opportunities, the fact that we're at this inflection point of $2,000 per GDP, which has been, you look at any country, it's really a takeoff point. And while there continue to be issues in India, there always will be in terms of reform. It's always a process. I mean, in the Western world, reform is an ongoing debate. The opportunities are huge. And I guess the message which you all are leaving so rightfully is that people should be thinking really big in India, not the old way. It's about thinking big, not just for the domestic market, but for India to be a base for a global market, global opportunities coming out of India. So with that, again, let me thank you very much for taking the time and to thank the South Asia student body for for inviting all of us. And with that, let me end the session. Thank you very much.
Thank you.
Thank you, everyone.
Thank you.
Thank you, everyone.
See you guys.